I've watched men lose everything in a single day. Brilliant men, educated men, men who studied charts for years, who read every book, who knew the theory. And I've watched simple men, patient and quietly build fortunes that would make your jaw drop. The difference between them wasn't intelligence. It wasn't talent. It wasn't even their strategy. It was one thing, one simple, brutal truth that most traders spend their entire careers refusing to accept. The market doesn't care about your opinion. It doesn't care about the pattern you spent 3 hours finding on the hourly. It doesn't care about you at all. The market moves in rhythms that were here long before you sat down at that screen and will be here long after you're gone. And if you want to survive in this game, if you want to actually build wealth instead of just lighting your account on fire in slow motion, you need to understand one law. Higher time frames always win. When I first started trading, I thought the secret was more setups, more trades, more analysis, more screen time. I'd sit at that desk for 12 hours straight, eyes burning, convinced that if I just focus hard enough, if I just stare at the chart long enough, I'd crack the code. I'd find the clever entry, the perfect exit, the edge everyone else was missing. You know what I found instead? I found the floor multiple times because I was doing what almost every new trader does. I was confusing activity with progress. I was mistaking business for skill. I'd see a beautiful bullish pattern forming on the 15-minute chart. My pulse would quicken. My fingers would hover over the keyboard. And I'd think, this is it. This is the one. Meanwhile, the daily chart was screaming a downtrend. The weekly chart showed a wall of resistance right above price. But I didn't see it because I wasn't looking. I was so obsessed with the trees that I missed the entire forest. And the market punished me for it every single time. Here's the analogy that finally made it click for me. Imagine you're standing on a beach, watching waves crash against the shore. Little ripples moving back and forth, up and down. They seem important. They seem real. If you stare at them long enough, you start to feel like you understand the water, but you're ignoring the tide. And the tide doesn't negotiate with ripples. The tide doesn't care that you found a perfect little wave pattern. The tide is going to come in or go out based on forces infinitely larger than any individual wave. Your 15-minute chart, that's a ripple. The monthly chart, that's the tide. I was trying to build a sand castle by watching the ripples and wondering why I kept waking up to find it destroyed. Here's what no one tells you about lower time frames. They're designed to seduce you, not intentionally, not by some conspiracy, but by pure psychology. Lower time frames give you more signals, more setups, more action, and action feels good. Action feels productive. Action feels like you're doing something, like you're earning it. Sitting on your hands, waiting for the weekly chart to speak, that feels like torture. Every bone in your body is screaming, do something. Everyone else is trading. You're missing out. But that voice, that's not wisdom. That's not instinct. That's your ego. And your ego will bankrupt you. What you're actually seeing on a lower time frame is raw, unfiltered human emotion. Someone gets scared, they sell. Someone gets greedy, they buy. Panic, euphoria. It's chaos. It's noise. And it's almost impossible to trade profitably over the long run. But when you zoom out to a higher time frame, something almost magical happens. All that emotional noise starts to cancel itself out. The spikes smooth over. The chaos resolves into clarity. And what you're left with isn't emotion anymore. It's the actual direction of money. Think about a river. Stand right next to the bank, and you'll see water swirling in every direction. Little eddies going backwards, currents moving sideways. You might genuinely believe the river has no direction. But climb a hill. Look down at that same river from above. The direction becomes undeniable. The river was always flowing one way. You just couldn't see it from where you were standing. That's what higher time frames do. They get you off the bank and onto the hill. They show you where the river is actually going. So you stop fighting it and start swimming with it. I want to tell you about a trade that humbled me. I had done everything right on the macro level. I'd identified a powerful, unmistakable bull trend on the monthly chart. This market had been building for months. The move was inevitable. I was certain of it. But I got impatient. I saw what looked like a decent entry forming on the hourly chart. I told myself, just a small position, just to get started. I'll add more later. The market immediately moved against me. Fine, I thought, the monthly thesis is solid. I'll hold. Then the daily chart started turning bearish. Doesn't matter, I told myself. Big picture is still intact. I held. The market kept falling. I lost that trade. And here's the part that still stings. I wasn't wrong about the big picture. That market eventually moved exactly the way I predicted. The monthly trend played out beautifully. I just wasn't in the trade anymore because I'd been shaken out by the noise. I'd ignored the rule that I now consider sacred. The higher time frame sets the direction. The intermediate time frames give you the rhythm. The lower time frames fine-tune the entry. If all three aren't aligned, you don't trade. You wait. I jumped in based on the hourly when the daily hadn't confirmed. I grabbed a ripple and got dragged under before the tide came in. That loss didn't just cost me money. It bought me the most valuable lesson of my career. Let me ask you something. Do you think the banks, the institutions, the funds managing billions of dollars, do you think they're scalping 5-minute charts? Of course not. They're looking at weeks. They're looking at months. They're planning moves that unfold over entire quarters. By the time they committed capital to a position, they're prepared to sit through weeks of chop, weeks of noise, weeks of uncertainty, because they can see the bigger picture. And when you trade against them, when you take a counter-trend position based on some pattern you found on a 15-minute chart, you are bringing a knife to a gunfight. They have more capital, more time, more patience, more information. The only advantage you have, the only one, is the ability to wait, to be selective, to say no to 95% of setups, and only strike when everything aligns. And the higher time frame is the filter that makes that possible. When the weekly and monthly charts tell you the direction, that's your army. That's the institutional money. That's the tide. Get on the right side of it, and then hold on. After years of failure, losing fortunes, and rebuilding them, I arrived at a methodology so simple. Here it is. Step 1. Identify the trend on the highest time frame you're interested in. Monthly, weekly, that tells you the direction of all things. Step 2. Drop to the weekly or daily. Is the trend moving in clean waves? Is it choppy? Is it in an impulse phase or consolidating? This tells you whether conditions are right to trade. Step 3. Only if the first 2 steps align, you drop to a lower time frame to fine-tune your entry, not to find the trade. The trade was already found. You're just finding the best price to step in. That's it. That's the entire framework. But here's the brutal truth about executing it. It requires you to do nothing for long stretches of time, while the market moves without you. No setups, no trades, just waiting. And I cannot overstate how psychologically violent that is for most traders. Your friends are posting wins on social media. People in forums are talking about their trades. Your hands are itching. Your brain is inventing reasons why this setup is different, why this one is good enough. Discipline means saying no, not most of the time, almost all the time. The patient trader, sitting in cash during a choppy, trendless market, protecting capital, preserving energy, waiting for the real signal. That trader will destroy the trader who needs to be in a position every day. Not because they're smarter, because they understand that the best trade is often no trade. I want to tell you about the trade that taught me patience in a way nothing else ever could. I had identified a massive bull move forming on the monthly chart. Everything about it was right. The weekly chart confirmed the direction. I took a position, and then nothing happened. For 6 weeks, that market went absolutely nowhere. 6 weeks of sideways, 6 weeks of chop, 6 weeks of waking up every morning, checking the chart, and feeling the creeping doubt start to whisper. Did I miss something? Is the trend dead? Should I just cut this and move on? In those 6 weeks, the lower time frame traders were in and out 100 times, making a little here, losing a little there, staying busy. And I'm sitting in this position, this barely moving, psychologically grinding position, watching them. Every day was a test. But the monthly chart hadn't changed. The weekly chart was consolidating, not reversing. There's a crucial difference between a trend that's resting and a trend that's broken. If you can't see that, you will be shaken out of every great trade you ever take. So I held, and then the market moved. Not a little, hard. The kind of move that takes your breath away. In the 3 months that followed that 6-week consolidation, I made more money on that single trade than most of those active traders made in an entire year of constant activity. That is the power of higher time frames. They give you conviction. They give you the ability to sit in the noise because you can see past it. They protect you from the most dangerous enemy you will ever face in the markets. Yourself, your impatience, your fear, your desperate need to be right now. When you're anchored to a higher time frame, those demons lose their power. You have an objective truth. You can point to the chart and say, the trend hasn't changed. I hold. That's not stubbornness. That's professional discipline. When I finally truly committed, to trading from higher time frames, my life changed. Not just my trading. My life, my stress levels collapsed because I wasn't watching every candle. I wasn't emotionally attached to every tick. I'd do my analysis, place the trade based on higher time frame structure, set my stops accordingly, and walk away. I'd check in periodically. I'd live my life, and my winners got bigger, not by a little, by an order of magnitude, because I was catching the real moves, the multi-week, multi-month trends that actually build wealth, not the $50 scalps that feel good in the moment, but don't change anything, not the small wins that make you feel clever, while quietly destroying your account through commissions and overtrading. The moves from $30 to $300, the currency trends that run for months, the wealth-building trades that most people never catch because they were too busy day trading the noise. Here's what else changed. I stopped second-guessing myself constantly because I had a framework based on objective, high-time frame truth rather than the chaotic emotions of a 5-minute candle. I stopped averaging down into losers because when the higher time frame starts showing me I'm wrong, I believe it immediately and I get out. And most importantly, I stopped being a frantic, screen-addicted trader jumping at every shadow. I became a strategist, waiting for my pitch, then swinging hard. I've been in this game for decades. I've made fortunes. I've lost them. I've made them again. And I'm telling you, from the deepest place of hard-won experience, that higher time frames always win. This isn't a theory. This isn't a preference. This isn't a style of trading that works for some people. It is a law, as fundamental as gravity. Your job is not to fight that law. Your job is to harness it. So here's what I want you to do right now. Close whatever lower time frame chart is open on your screen. Don't look at the 5-minute. Don't look at the 15-minute. Open the weekly, open the monthly, and ask yourself, not what you hope the market is doing, not what you need it to do. What is the market actually doing? Let the higher time frame show you the truth. And this is the part that separates the traders who make it from the traders who don't. Have the discipline to act on what it tells you, even when it tells you to do nothing. That's how you win. That's how you survive. That's how you build real, lasting wealth in these markets. The higher time frame always wins. Make sure you're on the right side of it.